If you're an investor, you need to know about the DSCR loan in 2025. These loans have become one of the most effective tools for building a rental portfolio without the headache of your traditional income verification or your traditional type of financing. And if you've hit a wall with your DTI limits, or you're self-employed, or you've got multiple properties and the banks don't want to lend you any money, this is how you stay in the game. I'm Ivan Simental, and I'm a mortgage broker out of Las Vegas, and I work with investors every single day who are using DSCR loans to buy real estate without showing tax returns, W-2s, pay stubs. And so I want to break it down and explain it to how I explain it to my clients. So first, what is a DSCR loan? It stands for debt service coverage ratio. It's just a fancy way of asking, does this property pay for itself? And if the income coming in from the rent covers the expenses going out, including the mortgage, then we're good. That's what lenders really care about with these programs. They're not looking at your job, they're looking at the deal. And this is why it works so well for investors. So if you don't have traditional income, or you're already maxed out with other properties, this loan doesn't really care. The property qualifies on its own. Now, let's get into the 2025 guidelines. Loan amounts can go up to $3 million. Minimums usually start at around $100,000 to $150,000. And these are for investment properties only, so 1 to 4 units. That includes single family, duplexes, triplexes, and fourplexes. You can use them for purchases, rate and term refis, or cash out refinances. And here's the best part that people love. There's no personal income or job info required because they really don't care at all. And so you heard it, like that's it. You don't need to prove where your money comes from. If you have a solid down payment, decent credit, a little bit of reserves, and the property cash flows, you can buy a house. Now, as far as structure goes, you've got options. You got 30-year, 40-year options, even interest-only loans. I usually see most people go with a 30-year fixed because it's stable and it's simple. But if you're trying to squeeze every single dollar out for cash flow, there is a 40-year interest-only setup that can work, especially in high rent areas. Now, let's talk about reserve requirements. Typically, they require 3 months of PITI. Sometimes we can get that waived on cash out deals. But honestly, the more reserves that you have, the stronger that your entire loan profile looks. So what counts as reserves? Liquid assets, of course, right? So checking, savings, retirement accounts, stocks, anything that can be converted to cash. So if your monthly PITI is $2,000, well, 3 months of reserves would be $6,000. So you have to have that sitting somewhere. And now, I want to talk about the payment. You can get in with as little as 15% down, right? That's your down payment. And so, but be ready. Rates will, of course, be higher because it's a bit riskier. So mortgage insurance might apply as well. And the property needs to cash flow well. If you can put down 20 to 25%, you're going to get a lot better terms and a much easier loan approval. And yes, for you first-time investors, this is allowed. Even if you don't own any properties right now, you can still do a DSCR loan, and you'll likely need to bring in 25% down as a first-time DSCR. But that sounds kind of weird. But the only real difference is that after that, your first deal, it opens up, right? And so your minimum credit score that you need is 620 to 640 in most cases. Lower credit scores, obviously, they usually mean higher interest rates, tighter loan-to-value limits. Ideally, we want to have like at least a 680 credit score to get more favorable terms. And this works also on short-term rentals. So yes, your Airbnbs, your VRBOs, and high cash flow vacation rentals can qualify as well, as long as you document the market rents correctly. So to wrap it up, DSCR loans are designed to help investors scale. And if you're looking to build out a real estate portfolio without jumping through the hoops that the conventional loans make you go through, this is it, right? You don't need tax returns, job verification, really that easy. And if you're curious whether you'd qualify, or if you want me to map out a strategy for your next few deals, please reach out. Happy to walk you through it. Thank you so much for taking the time to listen to this video. Subscribe if you want more breakdowns like this, and drop a comment with any questions or scenarios that you may have. And remember, I can help with DSCR loans in all 50 states. Reach out. I'd love to help and connect.